Welcome back to my tutorial called Trick Finworld. At this time, I'm going to give you a few assumptions about capital investment decision. Last time, I gave you about this personal finance and equity and debt habit investment based on mutual fund and stock market investment. So, at this time, I'm going to give you about few assumptions. I'm not going to explain about this. So I'm going to give you a few based on that capital investment decision. So let's move on there. So here I'm giving you CID, which is the full form of that capital investment decision. As I already mentioned that I'm gonna give you a few assumptions about that classification, and I'm not going to give you a few I'm not going to explain about that. So let's hinder about this like classification based on that. Okay, capital investment decision. I think which let me choose white one. I think it's more clear about this. Okay, so let's start on this CID. CID simply implies that capital capital investment decision as I already mentioned about that. See, I'm not going to give you a few explanation on that based on that. So let's slightly mention about what its assumption about is. So in case of capital investment decision, the first and the foremost one is that new or existing firms, new or existing firms, okay? Based on that, based on this new or existing firms, diversification decision, diversification decision, and after these new or existing firms, there is requirement about expansion, expansion decision, okay? Expansion decision, and after this, we should move back on that existing farms. And here comes the growth prospects. Okay, the growth prospects. After the growth prospect, here comes inadequate production facilities, right? Inadequate production, let me write in short form, production facilities, right? Here we got that diversification decision. Under this heading, diversification decision, we got that new product and new market. Here we got new product and new market based on that. New market. This is all based on the functionalities of that market. After this new market functionalities, we have to inquire about that, evaluate it carefully. Here, evaluation process come here. Evaluation process come here. So let me write evaluate it carefully. We have to carefully evaluate. Okay, to get rid of this avoidance of failure. To get rid of this avoidance of failure. Okay. So in case of capital investment decision, we have lots of multi-factual or multi-production facilities or multi-scenario and cost reduction decision is there. Okay. Let me write here cost reduction decision and I'm going to put here euro in the step and which is closely linked with this that new or existing firms is closely linked with this replacement it is closely linked with replacement and modernization replacement or modernization decision, right? After this replacement and modernization decision, we have to consider that improve operating efficiency. Okay, those as such improve operating improve operating efficiency. This simply implies that in case of these assets, those we acquire or in future aspect, and we have to maintain reduce costs, reduce costs, and inadequate production facilities and avoidance of failure. The last row here, we got that revenue expansion division, revenue expansion decision, right? So I hope that it's really clear that in case of capital investment decision, here the classification here, I already classified and I already assumed that. So we don't need to mention about that. We don't need to explain much about this C cost reduction decision. And the first and foremost one is that new or existing firms is here. And after this, that we have to expand decision. And after here comes existing farms and growth prospects and inadequate production facilities, and at the same time here diversification decision, and which closely linked with that new products and new market. And after evaluating carefully, we have to avoid failure. Avoidance of failure is really necessary to function market, okay, successfully. And here cost reduction, decision, and replacement. Sometimes you replace those all asset or obsolete asset, okay, obsolete asset or all asset which we don't need anymore, that we have to replace with the new one, the new asset. That's modernization decision. And after improving a year, after improve operating efficiency and which reduce costs. Reduction of costs is the main beneficial aspects and it's really significant over here. Okay, so let's move here. Here we got that CID. CID simply implies that capital investment, capital investment decision, which is the main aspect in case of starting the new one, or for the starters or the entrepreneurs. It's the main aspect, and it's really necessary to start new or set up venture capital, or to start a venture one. Okay, so under these guidelines, we got this situation. We have to look at situation aspect, situation particular aspect. At the same time, we have to look out for contingent decision, right? After the contingent decision, here comes that dependable proposals, dependable proposals, whatever proposal you've made should be dependable and should have a real consequence that, okay? After dependable proposals, we got that investment in one proposal, investment in one proposal or investment in one aspect, which have adequate return or return on investment is really signified. Okay. Then after investment in one proposal, we need that investment in other proposal. All right. Investment in others or here, let me write here proposals, right? So you get your destination. You have to look out for destination which is demanded and which will bring in future that ROT, return on investment, and destination. After destination come that accept or reject, accept or reject decision, accept or reject decision based on the decision. You choose that, okay? Here comes that acceptance based on expected returns. Based on expected returns. Suppose you invest your capital in mutual fund or equity. In case of that mutual fund, there are equity mutual fund, debt mutual fund, hybrid mutual funds, and like large scale, medium scale, there and flex cap and small cap. So you have to think that ROD, return on investment. You have to think that return on investment. What return you expected and CAGR, compound annual growth rate. Okay. So based on the situation, we got that mutually exclusive, mutually exclusive decision. I don't think you need to discuss about this. Mutually exclusive decision or mutually inclusive decision. That's the opposite of that one, the former one. Okay. And the other branch. Here comes that two or more alternative. In case of any type of investment, there is always substitute of alternative which you can choose, which you can freely choose that you have to choose that freely. It depends on your choice. Okay, two or more alternative proposals which you need to evaluate it. Okay, which you need to evaluate. Okay, and under these guidelines depends on that acceptance acceptance of one proposal or either one proposal or neither, those particular aspect, right? Acceptance of one proposals and rejection of rejection of another proposal. Let me write other proposal, right? Rejection of other proposal. You don't have to hesitate. You don't have to hesitate on choosing on which one you like or which one you're going to take up for investment in your future, depending on the CAGR or depending on the return on investment. So maybe you just do one option and you ignore the other one, right? So I hope that everything is clear about that CIDN, capital investment decision. The first of all, you have to look out the situation. Based on that we have to accept or reject the decision, and discriminate. After that, here comes that accept that based on that expect the returns. You have to think of that returns. The returns without thinking of the returns, then if you invest in that blindly, then you're gonna lose in that. Okay, and contingent decision, then dependable proposals, whatever proposals you have made, that it should be reasonable, and investment in one proposal or investment in other proposals based on uh, the mentor proposals, or based on the insurance advisor, or based on the investment advisor, based on that. Okay, and reflection of other proposal and eclipsion here, how to alternative proposals and evaluate it, and mutually exclusive decision and mutually inclusive decision is the opposite of the same time. Okay, so let's move on then. Here PCF simply implies project cash flow. Project cash flow. Cash flow is incoming and outgoing, which is the main aspect of in each and every company. Each the cash flow is very important to evaluate that the performance of the company or the performance of the joint stock company, and including that BS, which is balance sheet, is to evaluate that balance sheet is financial performance of the business. Okay, financial performance of the financial performance of the company, right? So project cash flow is essential to accumulate that consolidated consolidated cash flow statement, right? I hope that you have heard a lot about since many of you. I hope that uh, have acquired that background of that commerce or CS, CFA, charter financial analysis and cost and works accountants and charter financial management and certified public accountant, charter accountant. So, and you have done your maybe your MCOM, MBA, financial management. So you have acquired about this consolidated cash flow statement. So in case of this project cash flow, here initial cash flow. Initial cash flow is this the beginning period, okay? And the opposite side is that terminal cash flow, right? Initial and terminal is the opposite term, right? Here we go that interim. Interim or we may call that in between cash flow. Interim is supposed to function and in between cash flow that initial cash flow project. In case of project cash flow, we need that initial cash flow which we need to maintain in regarding that terminal cash flow, and after this come that interim and in between cash flow. Okay, that's all for today. That so I don't think that we need to explain about that since most of the users and most of the viewers are from commerce background, and most of you have gone through that financial management aspects and already done about accountancy, business method, and legal aspects, legal entity. So project cash flow and capital investment decision. And so you acquire that in-depth knowledge about that. So I don't need that. We need to discuss about this. So if you need that, if you need to know about this in details, that you can give me a feedback or give me a few uh, hints that on the comment section about which you need to know that which you want me to explain about this. So you can freely share that. You don't need to state about it. Okay. Thank you so much for following my channel and viewing my channel and liking and sharing to your near and dear ones. And thank you so much for everything. So have a great day, have a good time, and enjoy your life. Thank you so much. Okay.